A look at today's market rally fueled by this trade optimism. The Dow rose 181 points today to close back above 26,000 for the first time since early November. The Nasdaq was up 67. The S&P added 17. And for the week, the indexes were all up less than 1%. But for the Dow, this was its 9th straight week of gains. Its longest win streak, by the way, since May of 1995. One concern still hanging over the market, though, corporate earnings, which are expected to slow this year. And if they slow too much, there's even fear of an earnings recession. But does that necessarily mean the market will go lower? Pisani takes a look.
Does an earnings recession mean the stock market will drop in 2019? No, it doesn't. We're still in the longest bull market on record, yet the entire trading community seems convinced the bull's about to roll over. Last year's 6% decline in the S&P 500 is being hailed as proof that the market sniffed out an earnings recession. That's where earnings drop at least 2 consecutive quarters in a row. This news is being greeted with the usual round of hand-wringing from the analysts and strategists, many of whom are predicting little, if any, upward movement in stocks this year. The truth is this: historically, there is very little evidence that a decline in stocks always indicate an earnings recession, nor is the opposite true. There is little evidence that an earnings recession invariably leads to a decline in stocks. So what does matter? Well, it's useful to remember the two developments that historically have killed bull markets. First is a sharp and sudden price hike by the Fed, and the second is a recession. Now, the Fed, for the moment, seems out of the whole rate hike game, so that's not a major factor. This leaves a recession, the classic killer of bull markets, and that's where the fault lines lie. If you believe a recession later this year or in 2020 is imminent and unavoidable, then earnings growth will likely indeed decline, possibly by double digits with similar declines in stock prices. But if a recession is avoidable, it's quite likely the current flat earnings environment will not really amount to much in the long term. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.